All right, back.
So which levels qualify? Daily, high, low, open, weekly, monthly, session, Asian, London, New York, 30-minute cycle, or some combination?
High and lows only, not the opens.
And what does delivers into mean precisely?
Price trades above the time-based high or below it, or price trading into the point of interest.
So any wick touching that level?
Any wick touching that level.
And is there any proximity of a threshold in ticks, or how close is close enough?
So again, in terms of a imbalance, an imbalance again is a three candlestick pattern. If it's a bearish imbalance, price has to trade above the third candle's high. If it's a bullish imbalance, price has to trade below the third candle's low. If you're going to reference a order block, you have a bullish and bearish, price has to trade into the open price, whatever the open price of that down candle that created the order block, price has to trade into that. Same thing with a bearish order block, price would have to trade into the open price of the up candle that created the order block. That's how I define delivering into the point of interest.
So the current implementation treats an inverse fair value gap as fair value gap forms, price retraces into the zone within three candles. Um, the three candle rule clarification. Does the three candle window apply to the fair value gap forming and price entering the zone within three candles, or something happening within three candles of a specific trigger event?
It's after the fair value gap is formed. So when it's formed, you would want price to inverse it within actually 3 or 5 candles, 3 to 5 candles. That would provide an A plus setup.
So your price indicator draws imbalance boxes,
Correct.
understanding exactly which boxes qualify as valid POIs and which are filtered out is critical for Rule 1.
Yes, it draws out the imbalances. So the imbalance that is within the higher time frame point of interest, right? That imbalance must be inverse in 3 to 5 candles.
The cycle high-low definitions, the time indicator tracks 30, 90, 270-minute cycle highs and lows. Knowing exactly which of these are valid for Rule 2 sweep targets narrows the definition considerably.
So this is the thing. Yeah, it can either sweep any of those levels, and that qualifies it. So in some cases, it would just be a 30-minute cycle. sweep. In some cases, it might be a 30-minute cycle and a 90-minute cycle. In some cases, it may just be the 90-minute cycle, right? So any of those levels, as long as it's 30-minute, 90-minute, 270, a daily high, daily low, monthly high, monthly low, yearly high, yearly low, that qualifies it.
So SMT instrument priority, when NQ diverges from both ES and YM simultaneously versus only one, does that matter?
Either or, it can be both or it can be one. It's valid as long as you see one of the assets um, divergent. Because in some cases, NQ and ES would be convergent, so it would be doing the same thing, and YM is divergent, and it's not. So, and then sometimes there'll be NQ on its own island, and YM and ES is divergent as well. So it does not matter. You just need one of them giving you that divergence, SMT divergence.
Do you enter on the close of the inverse fair value gap bar, or do you wait until the next bars open?
You enter on the close of the inversion.
And the take profit and stop loss reference price should be the signal bar close or the next bar open.
This signal bar close. I mean, the next bar open is basically going to be the exact price though than the previous close. So it's kind of like the same thing. You think about it, but yeah, you can just it's the close.
So the current implementation uses a fixed 20 tick take profit and 15 tick stop loss. No, that can't be right.
No,
Rev likely uses dynamic targets based on the fair value gap zone size and the stop loss reference, a cycle high low as the take profit target, a specific R multiple, 1.5, 2, etc. Yeah, it's wrong in the current skeleton.
I mean, there's some truth there, but this is the thing for NQ, which I mostly trade. On average, I'm risking 100 ticks, and I'm going
Right.
for
Yeah, this was based on another strategy we were working on. It was 20 and 15, so that's not relevant. Force flat session close rules. He's getting into another strategy we were working on. Uh, does yours Rev shot clock model almost certainly has a session close rule, a time after which no new trades are taken and open positions are closed. Yeah, this isn't relevant because you're within that specific window, but obviously you don't take trades past. Um, I mean,
4 p.m.
you
I mean, really, yeah, 4 p.m. I don't really take trades past 4 p.m.
right. Is there any maximum trades per session?
This is the thing, like per session. I mean, that's actually a good question. I'm not even too sure per session. Um, shoot. I can say probably three because I'm only saying that because per session we have three 90-minute cycles. Every 90-minute cycle, um, Price has a delivery objective. So I would assume that you can potentially get three trades. Granted, they would have to fall within the framework that I gave you, the criteria. Um, I'll be honest with you, I'm a one and done for most days. Like the most trades I ever take in a day is like two trades because I wait for high probable trades. Um, I would have to like honestly back test and see like how many trades. Now that
Right, which I'll
example,
I'll do that. That's part of what I'll do.
yeah. So I really don't know, but like even in what I showed you earlier, there was two trades that happened within the same cycle. It was a sell into a buy, right? Is that happening all the time? No,
Yeah, I
right?
don't think the question really is matters that much.
Yeah.
I go through every parameter, test, you know, because the way I'm gonna have him build this is all the pertinent parameters will be easily adjustable in the setting of the indicator strategy that's on the chart. So I'm going to test all those. Um, which time frame takes priority? Rev's rules allow SMT on 10-minute, 30-minute, 90-minute, 270. Does he trade all of them simultaneously or does he use a hierarchy? Only take 10-minute SMT signal if it aligns with the 30-minute cycle direction.
Great question. It's just 10 minute and up is fine. Um, Obviously, if you have a higher cycle divergence, the trade is more high probable, right? But in the same sense, the example I showed you earlier, it had a 90-minute cycle S&T, but that wasn't even the directional move of the day, right? So just also be mindful of that. So it might pop up as a 90-minute cycle S&T at that time, or not, or a session S&T, and it gives you the trade. So as long as it's a 10 minutes S&T, I think it's valid and it still meets the criteria of if I'm buying it's below the open and all that stuff, I think you're good. So 10 minute, 30 minute, 90 minute, 270 minutes.
So in a perfect world, if it was you see them lining up on a 10-minute and 30-minute or what would be your perfect, this is absolutely gonna.
Oh, so the most high probable trade is a 270-minute SMT because that's a session based SMT. So that's the most high probable one, right? So you get that, there's a high probability that it's gonna go, especially after that you get your inversion within the 3 to 5 candles, it's gonna go. No matter if you have the directional bias right or not, it will go. I've seen it so many times. So yeah. If you want to grade it, I guess you can grade it because there's examples where shit, you have all the SMTs, right? There's examples where you have just one, right? Do you want to grade it and say the lowest probable one would be where you have a 10-minute cycle SMT by itself, then you have a inversion? I think that would be the lowest probable situation. Will I still take it? Yes, I will take it because it has to line up with everything else. So the only way you can grade the trades, I guess, is based off of two things: how price inverse the fair value gap, that did it happen within the 3 to 5 minute, I mean 3 to 5 candles, and what type of SMC you get.
So the optimization and refinement of minimum gap size for fair value gap. Rev may filter out fair value gaps smaller than a certain number of ticks. This would reduce noise signals significantly. High time frame trend filter. Many IC traders only take longs above a daily or weekly reference level and shorts below it. If Rev has this built into his model, it needs to be coded. News filter, high impact news events, destroy interday setups. Yeah, news filters don't work very well with these type of um, automated strategies I've found. Uh,
Yeah,
avoiding entries 5 minutes before and after scheduled releases. That would kind of be obvious. You don't trade around those, do you?
nope, not at all.
Uh, Correlation breakdown filter if ES and YM are also diverging from each other, not just from NQ, the SMT signal is weaker. A check that the two correlated instruments are themselves in agreement would tighten Rule 3.
No, it's not true because um, this is the thing. One of them, it doesn't matter. Like at the end of the day, you just need one of them to be divergent, right? It's only two things. It's either if I'm trading NQ, ES is going to be doing the exact same thing as NQ, and then YM is not, or it's going to be ES and YM is not doing the exact same thing as NQ. That's all. That's the only information I need. So it doesn't matter if two of them is in agreement or whatever it said or doing the same thing. That doesn't really matter. Basically, I just need one asset to be divergent. If I have both of them divergent, that's even better. And as long that as that is happening, that is a confirmation for a potential reversal, if that makes sense.
Yeah, and I guess just the last thing is what is the framework for determining the take profit and stop loss?
Honestly, it's well, I base it off of, and again, this is really based off of NQ. I'm not too sure about other assets, but this is more so for NQ. NQ, I have, and this is just experience, on average would move like 100 to really 100 to 300 ticks. So those are the moves that I'm looking for. So my risk is 100 ticks, and I usually go for 300 ticks. It's either 300 ticks or 200 ticks that I'm going for on average. That's just me trading it based off my style. That's what I see. Um, yeah, that's what I usually do. And sometimes I even have a 50 tick stop loss. And when I have a 50 tick stop loss, I only go for 150 ticks. So it's always a 1, 2, 3 risk reward, basically.
And one last, what's the close back requirement? Must the candle close back inside on the same bar, or is a subsequent bar close sufficient? Close sufficient.
So
So which specifies which specific cycles qualify? We've already talked about that, or only specific ones. How much of a breach counts? We already addressed that. Any wick beyond the level or minimum X ticks through it. What's the close back requirement? Must the candle close back inside on the same bar, or is a subsequent bar close sufficient?
yeah, as long as it is within, and this is in reference of the fair value gap on the 1 minute time frame, right? Basically closing to create the inversion, or no? Or is this delivering into that higher time frame zone?
Into the higher time frame.
I mean, in all honesty, it doesn't have to be. the same bar. It can be the next bar as well. That closes in the zone. Like my thing is honestly, and I don't know, I understand your coding. I don't know how to like really it honestly has to just close in the area. That's it, right? And depending on the time frame, it's gonna look like a wig, depending on the time frame. But um not even too sure as to how else to explain it, honestly.
Yeah, okay. Yeah, I think
Because
that's
like
all we need.
if it's like the same candle and it's in the zone, it's fine. It doesn't need another candle to to come back in. Hold on, say that again. Just read it again so I'll make sure I'm actually understanding it correctly.
And something's going on with your microphone. It's like going whoa, 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 whoa.
No, my wife is doing laundry.
Oh, oh, oh.
Yeah, she's doing laundry.
So I'll just read this last part. It was about you saying, shit, I can't find. I'll be back. Um, you wrote, also figure out the liquidity sleep sweep. We will make sure it is time-based liquidity. And I just said to Claude, what do you interpret in that statement? And Claude said, Rev is telling you the sweep isn't looking at random swing highs and lows on the 1 minute chart. It's specifically targeting the highs and lows formed at known time-based cycle boundaries, the
That's
same levels his time indicator already draws. In plain
correct.
English, the liquidity pools he cares about are the highs and lows that formed at the start or end of a specific time cycle. Those are the levels where retail traders predictably place stops because those are obvious session highs or cycle high reference points everyone can see.
Mhm.
What this means practically, his time indicator already tracks these exact levels. Uh, A time-based liquidity sweep means price spikes through one of those specific labeled levels and snaps back, not just any random 1 minute swing, specifically those cycle boundary highs and lows. What this solves, this actually makes Rule 2 significantly more automatable than a generic swing-based sweep. Instead of trying to define how far is far enough or arbitrary price swings, we now have a defined list, a cycle high-low values in his indicator already calculates. A binary event price wicks through one of those levels and closes back on the other side, a time context. The sweep should occur within the current active cycle window. So this is where which specific cycles qualify? All of them, 30, 90, 270, session, or only specific ones? So we've already addressed that. How much of a breach counts? Any wick beyond the level or a minimum number of ticks through it? What's the close back requirement? Must the candle close back inside on the same bar? Or is a subsequent bar close sufficient?
Yeah. So now I understand. Yeah. Yeah, it can close back in on the next bar. And the reason why is so like I was explaining before, is you have two definitions when price is going above or below a higher low. So you have a sweep or you have a run. So what it would look like is this is considered a sweep here. This is a sweep. You can see because what is left is a wick, right? Now, you also have situations where this is a sweep too, but let's see here. Here is a run. I mean, you end up having a sweep up here, but you can see lower, you have a swing high here, and you can see how price closes above, and it's up there about two candles, and then closes back in. So, yes, you can have something like this, right? This is called a run on liquidity versus a sweep where it's just leaving the wick. And this one too, this is a clear run here, right? This whole candle closes above, accumulates, and then you can see they come back in. So yes, it's the latter. So it could be the next or a couple of candles after, right? I mean, some people try to define it as, oh, it should go up in like three candles. I'm not going to say that. I mean, three or five candles, but you can see this was up one, two, three, and then it came back. I guess it did come in before five candles, I guess it did. But I don't think we need to put that rule exactly to it. But yeah,
Right.
yeah, that's it. So
Okay. And did you
makes
figure
sense.
anything out about the transcripts?
On Zoom, I did not, but let me just see if I feel like on Zoom you can like.
No, 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 no. I mean, for the videos that pertain to this. I mean, this might be enough. Let me transcribe this.
I think this is enough, 100%.
Yeah,
This
it
is one
probably
hundred
is.
percent. Honestly, I don't think you need anything else because you have multiple examples of it, and yeah, I think this is enough for sure. It's no more to it, right? Because this is just a specific model.
Right.
There's obviously other models, but this is just again, I call it the shot clock model. This is just one. There's nothing more to it, right? It's higher time frame, lower time frame, SMT, inversion. Is it below? Okay, it's below. Okay, I can take a buy below those opens. The only thing is, you know, and I guess I mean it should do it while you're trading, while you're taking a trade. It's like being mindful of the opens that I'm talking about, right? So, like again, in this situation, the inversion happened at 11:32. So I already know 11:32, the 90-minute cycle open is something that we're going to reference. The current 1 hour open is also something that I'm going to reference. And also the current 4 hour open, right? So, and then we know it changes because if I was taking a trade at 10, I'm really only referencing the 10 o'clock candle because 10 o'clock is a new hourly candle, 10 o'clock is a new 90-minute cycle, and it's a new 4 hour candle. But if I went further and say, hey, I was trading over here at 9 o'clock, right? 9 o'clock, I'm going to reference obviously 9 o'clock itself, wherever 9 o'clock is at, which is here. I'm also going to reference 8:30 because that's the current cycle, that 90-minute cycle that we're in. It's the 8:30 time right here. And then I'm also going to reference 6 a.m. because that's the current 4 hour candle that you're in, right? So you're in the 6 a.m. candle all the way over here. That's the opens that. So you got to just be mindful that that information is changing because we want to always look at the current 4 hour, the current cycle, and the current hourly open, right? So if I'm selling above the current what? So this was the best point to sell. Obviously, this is not your model, but this is the best point to sell here at the 9 o'clock hour because at this point I'm above the 8:30 cycle open. I'm above the 9 o'clock hourly open, and I'm above the 6 o'clock 4 hour open. You see that?
Right.
So I
Yes.
know that this one little candle, this is one little candle here, would have been the best time to short during 9 o'clock. Now, after that, we still have all of this over here that we could have short if we were trading this way, order block entry, whatever, because over here, at least it's above the 9 o'clock and still above the 6 o'clock. And then now you get down here and you're trying to short again. This move right here is the only move you can take when price breaks below here. I know that over here is the only move you would take because it's at the 6 a.m. open. I'm still trading above. Granted, yeah, it's still 9 o'clock, so I'm still trading above. That would be a last entry. Now, after that, I would not be looking for short positions over here. Even you know what I'm saying? Even though this is 10. Oh, 10 now I would have been because now this is above 10 o'clock, so that's different. But the moment it gets below 6, I would not been looking for. So you'll see here, this is an inversion, right? The algorithm should not pick this up. Yes, this worked out, but there's some cases where you would get ripped.
What is that line at 27,374? That white line across?
6
Yeah,
a.m. open. 6 a.m.
6
open,
a.m.
right? So remember, we're in the 9 o'clock candle, so we're still referencing the 8:30, the 6 a.m., and the 9 o'clock. At this time, this last little wick, we're already below 9 a.m. and we're below 8:30, which is 90-minute cycle. So in my head, this is only level I could use as a reference. So when it gets below 6, I'm like, damn, for me to sell this, it has to get back above. And the fact that price creates a imbalance over that would have gave me confidence to say, you know what? I should be able to short here, right? Especially since price already mitigated here and have my stop up here. Again, this is not, what we're doing. This is not the inversion, but that would have been the logic. And that's why when we're trading the inversion, if we trade with that logic, we take high probable trades. But then if you waited and you told yourself, you know what, I do want to sell still, you need to wait for the new hourly open. And now you would have had to sell. This made sense now. This idea made sense and I actually took this idea. I actually took this idea with the inversion. So our inversions would have caught this because you have an inversion here. And it went. The idea was you're selling above the 10 a.m. open. What happened? Price goes up straight into the imbalance, right? They have some liquidity there too. They gave us the inversion. You could have took a trade right there because you're above the 10 a.m. open now. Now that trade made sense, right? But now when
Right.
it gets below it, are we trying to sell over here? No. Okay, hit it again, I guess. Whatever. But I'm not selling below the 10 a.m. candle. No, that's a no-no. Doesn't matter what it do. If it continue, let it continue. Right? But yeah, that's about it.
All righty. How can you can stop the recording.
Yeah, I'm gonna just send it to you via Discord.
The
So I'm
what?
just the recording. I'm gonna just drop the recording into Discord.
Okay, and